and welcome to Gulf Intelligence's daily webinar. Today is the 22nd of March, 2023. I am Vandana Hari, founder of Vanda Insights, and today's guest host. I'm delighted to welcome today's panel speakers. We have Robin Mills, CEO of Kamar Energy. We have Vibhuti Garg, Director for South Asia at Institute for Energy Economics and Financial Analysis, and Walter Simpson, Managing Director at CC Energy Development. A warm welcome to all three of you. We'll take a quick look and a recap of the markets and then plunge right in. So, well, crude has been through a ringer pretty much at least over the last fortnight, more so last week. We had Brent and WTI plunge to 15-month lows last Friday. Of course, almost tied at the hip with all the banking world chaos, turmoil, crisis, whatever you want to call it. From Monday, we have seen a bit of relief come back into the markets. I at least feel a sort of tentativeness about it, but we'll see. So along with the risk appetite in the broader markets, we have seen crude prices recovering as well, but of course, very, very slowly. This morning in Asia, crude is down a bit. I presume a bit of profit taking happening, and perhaps some skeptics out there still, whether it's time for a rebound in crude. So as we speak, WTI futures are around just over $69 a barrel, and Brent around 74, 75. Robin, I'd like to start with you. So as I mentioned, for the past few months, we have seen crude move in sync with the gyrations in the financial markets. And in recent weeks, we have seen investors recalibrate and then again recalibrate expectations of the Fed's monetary policy. Obviously, the Fed meeting, the two-day meeting began yesterday. Tonight, our time, US morning, Wednesday, we will know what the Fed decision is on the rate hike, if there is a rate hike indeed this week. So as I mentioned, crude prices have bounced up. Some people say they may have bottomed out. We'll have a survey question later related to that as well. But tonight, of course, the Fed decision is pretty big. But Robin, in your view, do you think crude is set for a continued price recovery in the short term? And sort of related to that, do you think this umbilical cord that we have seen between the oil complex and financial market sentiment, do you see that remaining in place as well?
Well, I think, look, the past couple of months, absolutely. You know, as you say, oil has been very much trading in line with these economic and financial expectations. And okay, I mean, where oil goes in the next few days, depending on the Fed decision, of course. But I think in the longer term, we look at the fundamentals. OSPs remain strong, product cracks remain strong, end user demand still seems pretty strong. So what I see is not the sign of a market struggling, a physical market that's actually doing quite well. So I think the prompt price have really been have really become unanchored from that. And I think over the next few months we'd expect a return to crude trading more in line with those fundamentals, which are, as I say, are reasonably strong. Now, this is obviously assuming there's no worldwide more serious banking crisis or a slip into a serious recession. But at the moment, I see the signals should be relatively good, and I think this big sell-off over the past week or so is rather overdone.
Right. So, would you expect prices to climb all the way back to where they were before the banking crisis hit, or partially?
Yes, I'd expect to climb back and later in the year possibly go even higher. As I said, the physical market remains pretty strong, assuming that continues. And I think the market's been a bit overreacting on on the Fed expectations again for a couple of months now. It's kind of a weird situation when the jobs outlook is good, then oil price drops because people think that means rate rises. But the jobs outlook being good is a good sign for demand. So it seems a bit contradictory to me, the behaviour we've had over the past couple of months. And I think again, look at not to say that banks always get it right. Look at the forecast of the major banks, that they've trimmed them a bit, but they're still looking at $95 or even $100 later in the year. OPEC still has the potential. Of course, an OPEC meeting coming up, but OPEC still has the potential to cut further if it wanted to. They're still pretty much in control if it were worried about prices getting too low.
Yeah. Trim is the word for some of those forecasts of $100 and over $100 per barrel being hit later this year. It almost seems to me that they are reluctant. Some of the very optimistic forecasters are reluctant to pare their expectations down quite a bit. Okay, one of the countries in this part of the world, obviously, which is extremely sensitive to oil prices is India. And Vibhuti, we have, and this is a very well-known and circulated figure about India, and it goes to some of the dilemmas of India's energy policy as well. The fact that the country is now dependent on crude imports for 85% of its demand. The government has not been very successful in bringing down this ratio, though I do note that the target to do so very much remains in place. I think it was as recent as at least October of last year that the petroleum minister said that India aims to step up its domestic production to a degree that it's able to satisfy 25% of the country's needs by 2030. So my question to you is, how does this ambition to grow India's domestic production, how does that marry with India's decarbonization goals?
Right, Vandana. So as you rightly pointed, that India imports about more than 85% of its oil from other countries. And if you will look at our daily consumption, it's about 5 million barrels of petroleum consumption every day. And the way it is increasing is almost like 3% on an annual basis, which is much higher than the global average, which is hovering around 1%. So in that kind of a situation, where the demand is increasing, it's not like a stagnant demand. And on the other hand, we are increasingly seeing, imports going up. So what happened was, in order to kind of, after the Russia-Ukraine war, when the prices soared up high, so India started looking for more and more options. And that's where India was pressing hard to increase its own domestic crude production to reduce its reliance on imports. But I would say those are very, very aggressive numbers. I mean, given that in 2023, we are importing more than 85% of our oil needs from other countries. So it looks aggressive. But on the other hand, India is coming up with other solutions like ethanol blending program. So increasingly, share of ethanol is increasing, which was to the extent of lower than 1% in 2013 to now, around 10%. And that's the aim in through which India is looking at substituting some of its oil demand by increasing the share of ethanol blending. So that's where I think the government plan is to increase domestic production, but maybe not to the extent of 25%. But I think some of it might be met through ethanol blending.
Right. Or it might also be a case of like aim high as you can when it comes to domestic production, and hope to get at least as close to the goal as possible. But
right.
Vibhuti, are you saying, if am I understanding you correct, that the ambition, the drive to increase domestic production, to boost it, is higher typically when prices climb, and it tends to take a bit of a backseat when prices soften? Is that what is happening?
That's right. So, last year there was an urgency for the government to look at options and, amid rising crude oil prices. But then government started scouting for cheaper options, and that's where, our imports from Russian oil also increased substantially. Uh, because it meant increasing trade deficit, and there was a lot of decline in even the foreign exchange reserves as government had to shell more and more money for the same amount of imports. What also happened was while petrol and diesel prices are deregulated, but beyond a certain point, government didn't allow oil marketing companies to raise prices, which led to huge losses for the OMCs. And also, since last year, we also witnessed increasing inflation in the country because of high oil prices. Now, with prices softening, the approaches that the OMCs are making up for the losses that they've incurred in the last 1 year and have not actually reduced the petrol and diesel prices for the common consumer. But as I said, again, this has led India exposed to supply-led disruption. And that is why, increasingly India is looking at increasing ethanol blending, also looking at electrification of vehicles as an option. So government is providing a lot of support through different government schemes to accelerate deployment of electric vehicles in the country, both for commercial, public, as well as private cars and scooters as well.
Yeah, that's a good point. Definitely discounted Russian crude is a major source of relief, in addition to generally prices being much lower this year and expected to remain lower this year. But I think diversification will very much remain on the government's agenda. One of the countries that has reaped the benefits of last year's high prices, of course, is Oman. So, Walter, I was reading Oman, not surprisingly, reported record export revenues of $66 billion last year, of course, driven by high oil and gas prices. I do note that the 2023 state budget, and correct me if I'm wrong, is based on a very modest $55 per barrel average crude price. And that leads me to ask you then, where do you think last year's windfall will be spent or is being spent? Or do you think the country is more into looking ahead, being a bit more conservative about what its revenues might be, and as a result, there will be a tendency to save for a rainy day? What do you think?
I think fiscal prudence is the factor here. Look, certainly, yes, the increased crude prices, increased production in the country has definitely made a huge difference to the fiscal surplus. But they're conscious that they need to manage that effectively. And, there is a significant investment here going into the sustainable energy of the future, particularly in hydrogen, but also in wind because of the geographical location and the opportunities there. So the country's conscious that the revenues it's getting from oil and gas at the moment, crucial for the development of the country, and crucial that revenue funds sustainable energy into the future. So I think there's clear plans in place for that. And I think there's a consciousness that needs to be funded, and it needs to be funded from revenues. So be conservative in the pricing and make sure we're retaining those funds where we need them for the development of the country.
Yeah. So what does that do to, let's say, production expansion targets or even spending money on decarbonization of? I take your point on, and I think this is a trend across the Middle East to try and move into the green energy space. But what does this do in terms of spending to expand production, oil production capacity, or even decarbonize the existing oil and gas production in the country?
So it's a strong drive on both of those categories, actually. There is encouragement to increase exploration and increase production. The country's aiming to keep its production above 1 million barrels a day and grow. And there's also a strong drive around the emissions associated with that. As people are aware, Oman recently announced its net zero by 2050. But also it's committed to zero flaring before 2030. And those are not just nice headlines. There genuinely is a push from the government behind those for solid plans and commitments from companies to meet those targets. And that's being driven very hard. So I see this, a real drive towards that consciousness that, you know, the hydrocarbon economy isn't here forever and it can't be wasted.
Yeah, and the hydrogen projects that you mentioned, is that based on domestic gas?
Yes.
Okay, that makes sense. Robin, I'll come back to you on the Xi Jinping and Vladimir Putin meeting this week. I see the Western governments and media have been mostly dismissive, not surprisingly, of the meeting, at least from the perspective of its potential to yield rapprochement on Ukraine. But of course, there's commercial ties between the two allies, and those have been growing stronger. Chinese imports of Russian oil, gas, coal, all of them jumped in 2022 year on year, and not just in value terms, but also volumes. What significance would you ascribe to this week's meeting between Xi and Putin, whether it's you want to look at the sort of geopolitical dividend or on the commercial side?
Well, okay, I mean, look at the energy trade between the two countries. It's expanded a lot, as you say. It's still really a story about oil in value terms. The amount of trade of gas is, you know, reasonably significant volumetrically, but not that significant value-wise. The amount of coal has gone up quite a bit, but it's relatively tiny financially. It's really about oil. And China absolutely has stepped up its purchases of Russian oil, but not to that great an extent. I mean, really, the extra oil coming out of Russia that can't go to Europe has been going primarily to India. And to some extent a little bit to Turkey, but you know, China has stepped up purchases, but it's far from filling the gap, and there are structural reasons for that, to do with the amount of Russian crude that Chinese refiners are able and feel comfortable running. But there's obviously a strategic angle to this relationship too, and I think what we saw from Vladimir Putin's visit to Xi Jinping is, you know, who's the leading partner in this relationship. It's not a partnership of equals anymore. If it was ever pretended to be, you know, very clear that Xi Jinping is the one very much in charge here. And, you know, there's a Russian sources saying, you know, we accept we've become a resource colony of China. You know, that's a bit extreme maybe, but that is the way that this is trending. You know, Chinese manufactured goods to Russia in return for Russian oil, gas, coal, minerals, going the other way. But I think we should also say that there's a couple of key factors here. One is that reorienting Russian trade towards China away from Europe is difficult. And in the case of gas, you know, virtually impossible. Yes, a bit more can go that way, but physically, even after many years and huge amounts of investment, there's no replacement for the European market. And secondly, the Chinese, of course, see the dangers of Russian of dependence on Russia. They see what's happened to Europe. They're not about to get into that situation, whether for oil or for gas. They'll take some more Russian fuel, but they'll make sure that they have a diverse range of suppliers and non-oil and gas suppliers as well.
Yeah, and there are reports that Xi Jinping is expected to speak with Zelensky now. Do you have any views at all on whether we should hold our breaths for anything on the political front that may come out of, you know, China's peace proposal as well, which was didn't really get much traction a few weeks ago?
Yeah, well, look, the Chinese peace plan was a nonsense, and I think the Chinese knew very well that it was a nonsense and a complete non-starter. But it's important for them to present something so they can paint themselves as the neutral, disinterested, you know, rational party that's there just willing to help if it can. So they had to put a plan on the table, although they know that neither side is at all willing to listen to it now. I think, given China's relationship with Russia, it's unlikely that China will ever be seen as that kind of neutral mediator. But hey, it might be part of a group of countries that eventually are in some kind of negotiating group or guarantees of whatever peace treaties are eventually agreed at. But we're a long way from that now. But for now, you know, China is willing to take the geopolitical advantages that it gets from this, and one of those is having the upper hand over Russia.
Yeah, fair enough, Robin. And dare say Xi Jinping probably fancies himself as a peacemaker now, especially with having brought Saudi Arabia and Iran together some days ago. Right, I'll change tack now. When Vibhuti, the hot Indian summer, I guess, officially starts next month. I understand the country is gearing up for peak power demand in April, amid, I think there's some early season heat waves that have been predicted. And of course, with that comes the horror of supply deficit in the electricity sector. So, but at the same time, what I understand is that India has plenty of coal, has been using and generating plenty of coal-fired power as well. So where exactly is the crux of this problem, and how do you think it might be resolved this summer?
Right. So there's an expectation that India is going to surpass its earlier peak demand of 216 gigawatt, which we witnessed last year. And this year, we are going to experience at least 20-30 gigawatt of peak demand this summer. So the way the government has, as I said, even last year, government sprung into action. And this time, they have come up with certain measures to avoid any power shortage crisis situation. So the government has taken a stand and they have said that there will be no coal retirement till 2030. So there were certain plants which were scheduled for retirement, but given the increased demand situation, government has kind of announced that there will be no coal retirement. Further, usually the peak summer season kind of coincides with also availability of hydro. And that's when a lot of plants, coal plants would undergo maintenance. But this time, all the maintenance have been scheduled early and there will not be any plants going under maintenance during peak summer season. Further, the government allowed, all imported coal plants to run at full capacity and has allowed the fuel cost pass-through. So any shortfall in domestic coal production or domestic coal generation has to be met through imported coal-based plants. We have a lot of about 24-25 gigawatt of imported, 16 gigawatt, not 24. We have 24 gigawatt of gas-based capacity and about 16 gigawatt of imported coal-based capacity, which was lying stranded. And government is reviving all those plants, and even the gas-based plants, even if it has to import gas. And for imported coal-based plants, government has given them the mandate to run at full capacity and have mandated distribution companies to buy from these plants, even if the prices are much higher, because the government is going to allow the pass-through. So that's the plan. And hopefully we did experience some rain in the last week, 10 days. So hydro might come to some rescue because the reservoirs have some, capacity that is now available for running hydro generation. And further, renewable energy, which has been added in the last 1 year, would also play a very instrumental role in meeting that extra demand. Because we have also seen, the load profiles have changed and we are experiencing peak demand during the day and not during the evening. So hopefully solar will also play a lot more role in meeting that demand.
Yeah, but it sounds to me like coal is king, but it also sounds to me like there is a greater sensitivity within the authorities and the government to ensure not major power cuts and breakdowns. Because again, I think we also need to keep in mind that India is also marketing itself as a destination for foreign investment in manufacturing. So, so is that right? Do you sense a greater sort of sensitivity and drive to ensuring smooth power supply?
Absolutely. India is promoting this whole culture of domestic manufacturing and a lot of startups. So given that kind of a scenario, energy becomes a critical input for ensuring that the manufacturing base is more and more manufacturing base is set up and a lot of FDI, the foreign direct investment, comes into. So unless the energy situation is well settled, not many companies or investors would be looking at India. So government wants to ensure, and we are endowed with domestic core resources. So that's the reason, there is a push to use as much as domestic resources. And on the other hand, we are also have huge potential of renewable energy. So I think that's the policy, all fuel kind of an approach that the government is adopting, and using as much internal resources to meet that demand.
Yeah, absolutely. Madeline, shall we do the survey question quickly, and then I'll go to Walter? Right. So in the coming month, Brent crude oil will rise above $80 a barrel, or settle in the low 70s, or let's say low to mid 70s, where current levels basically, or will it test new 2023 lows, which would mean going below the 15-month nadir that we saw last Friday? So have your say, and I'll turn to Walter. Walter, I noticed earlier this month, Oman signed an MOU with Iran for cooperation in the upstream as well as downstream oil and gas sectors. I couldn't really get hold of much detail on this. I think at least not from the Oman side. I think there was some details that were given by the Iranian energy minister. But I also noticed, when we look at the recent thaw of relations between Saudi Arabia and Iran, it has put the spotlight on how that might modify the Islamic Republic's relationships in general with the Arab world. How do you see Oman-Iran cooperation? Is this something that sort of is independent of how Saudi Arabia has moved in recent days with regard to Iran, or is it connected?
So Oman has always been extremely good at maintaining neutrality and maintaining relationships with all countries. It's never taken sides, and that's been a real strength of the country over the decades. And it has been a natural arbitrator between disputes and has kept the relationships with everybody. You think of the recent troubles that Qatar had in the region. Oman always maintained a relationship. It's maintained a relationship with Iran all the way through, and clearly shares a border with the end of the Musandam Peninsula, the Straits of Hormuz. That's Omani territory, and clearly shared with Iran. There are areas of prospectivity out there that are between the two countries. So there was always going to be a relationship between them on that basis. I think effectively it's independent because Oman's always maintained those relationships with everybody. But of course, with the relationship soaring with Saudi, that has an impact. And no longer is the route to Iran through Oman. Now Saudi have that direct relationship that's working. So I think it does have an impact, but I don't think it's going to change how Oman treats Iran. Okay,
got it. Madeline, do we have the response to our survey question? Okay, 64% of our respondents think it will rise back to above 80, similar to what Robin was saying earlier as well. Almost a small minority thinks it will test new lows for the year. And so there we are. It does seem that the majority opinion is that this was that crude did slip into oversold territory. Okay, I'm gonna stay with you, Walter, and I'm gonna have a very quick question for you and for Robin about OPEC Plus. So OPEC Plus have kept their powder dry so far. I think maybe when they look back in a couple of weeks, if all of us are correct in this survey and prices have clambered back above, let's say, $80 for Brent, and they'll look back and say, okay, we were right in just taking a wait and watch stance. But what conditions, if any, do you think will make OPEC tweak their current production policy? And by that I mean sort of either way, reducing it or wanting to pump, or deciding to pump more crude, let's say, in response to China coming back.
So I think underlying it all is the market fundamentals. Myself, I don't think these fluctuations that we've seen over the last couple of weeks are driven more by the financial markets than actually what's happening in the supply-demand balance. And I think that's what's going to drive it, is what they see in the change in supply-demand balance. And that, I think, has got to be the way you look at it, rather than the short-term fluctuations.
Sure. Robin? Are you on mute?
Yeah. Well, you know, as I say, I think the view of the poll was quite clear, and pretty much in line with what I'd expected. You know, there's only a small minority seeing us testing new lows. I mean, look, that remains a possibility in the event of a more serious economic deterioration. You know, I'm not a banking expert. I can't say how likely that is. It does seem to be that we're probably, you know, there's been pretty decisive action on the banking crisis this time. And, you know, we should bear in mind that crises never play it the same way twice. And this is not 2008-9. You know, the banking system is in a very different place. And I think regulators are very aware of the dangers of that. Not to say things can't go wrong, but at least they're probably not going to go wrong in the way they did in 2008-9. And I think, you know, again, we didn't say too much about China on this call, but, you know, the Chinese factor remains important. And, you know, what we can see, Chinese activity is strong. The overall economy is not looking for a great year, looking for a kind of mediocre year. But the return to personal activity is very high, and that will certainly drive all demand. Yeah,
I would agree. I think a great deal of unpredictability on China. We have run out of time, but Vibhuti, I'm going to give you the last few words on a important sustainability topic, and your sort of succinct answer, please, on this. So you mentioned ethanol and India's very ambitious targets there, but there's also some concerns coming up about the kind of sugarcane that farmers, the variety of sugarcane that farmers have been planting in India, which is it's already a water guzzling crop, but even more so in the case of the new high yielding varieties, and fresh water is an issue, and supply is an issue in India. Do you see it as such? Do you think something ought to be done in this regard?
Absolutely. So I think to the extent we have, India has surplus, sugarcane production. So using that production for ethanol blending makes sense, but increasingly, shifting the use of land for sugarcane production for ethanol blending will lead to much higher problem of not only the water crisis, because it's, as you rightly said, requires huge amount of water, but also on the food security, because you need many food items to ensure food security in the country. So I think the approach should be to only restrict the blending to the extent of surplus production and not divert more and more land for sugarcane production for ethanol blending, because even land is a scarce resource in India. So I think both for the water crisis, the land crisis, and the food security crisis, I think there needs to be a very careful approach.
Well said, Vibhuti. So with that, we'll wrap it up. Please join me in thanking our panelists today, Robin Mills, Vibhuti Garg, and Walter Simpson. And of course, thank you to everybody who tuned in to listen in to this discussion. And that's a wrap. Bye-bye.
Thank you. Bye.
Thank you.